Hey everyone, I'm Cary Smith and I'm sitting here with Amar Shah. Amar and I are from Client First Capital. And Amar, I'm excited about the topic for our video today. And so here we are solving the world's problems and let's jump right into it. Here's how I want to kick us off. What if one of the biggest economic challenges of the next century comes down to one simple question? And that is, who pays for government when fewer people are working?
That is a really good question because we're in this stage of AI and robotics. And, for most of modern history, government finances have heavily relied on human labor. So government funding is based off of labor capital, which, individuals work, they earn wages, they pay income tax, there's payroll taxes, and those taxes is what have funded infrastructure, defense, education, social programs like Social Security, Medicare. So the structure of government finance has been really closely tied to the structure of the labor market. And now we're entering probably the next decade of changes in the labor market, significant changes in the labor market.
Yeah.
And, the landscape is beginning to shift in ways that could fundamentally change how the tax base is created.
Yeah. So we're seeing, I think, two things happening at once. So AI, companies are beginning to adopt AI, and that's going to reduce the need for workers, right? And make
Mm-hmm.
companies more productive. We're also seeing an increase in robotics, right? Also highly reliable, very, very efficient, right? And then related to AI, but slightly different, is software is getting more effective and more complex, but also more affordable at the same time. And so we have all of those things that are reducing the need for workers and making corporations more efficient, while at the same time we have an aging population of people who are leaving the workforce and will but actually will still rely on government benefits like Social Security and Medicare and other types of services. And so that creates some pretty good tension for funding the government.
Yeah, absolutely. Keep in mind, Social Security right now has a 6-year runway, right?
Mm-hmm.
And
Yeah.
so these are concerns that are going to have to be addressed in the next decade, right? And when you have these two forces that are combined, the structural tensions begin to emerge. And I would also say that even now, if you look at it, when we look at social programs, $6 for every $1 that goes to somebody that's 18 or younger, $6 is going to somebody that's 65 or older. And that's society wise, that's going to create some tensions as well, right?
Yeah.
And so we're not even talking about the fiscal imbalance, right? We're just trying to figure out how are we going to fund the government. So I believe there's actually three ways that we will fund the government, right? And I think the first way that will, and I should mention that we're shifting away from taxing on labor, right? So the income tax, payroll tax, um, corporate tax, tariffs, excess tax, estate taxes, you know that framework that we have today, we're talking about that shifting. And so the first way I believe is a capital tax. And a capital tax can be broken down into two ways. The first way is on capital gains. When you buy an asset and then you sell that asset and you make a gain, that gain right now is taxed at capital gains rates. Those may go up in the future to account for the lower income taxes that we collect. Another way is through corporations. Corporations that are deploying AI and robotics. We just saw Amazon let go of 30,000 workers, right? I mean, these are large numbers, and there could be some decisions around if you replace human capital with AI, software, robotics, whatever it may be, that corporation has to pay that tax that human capital would have, paid for.
Yeah, and I think publicly, I don't know this, but publicly there may be an appetite for that. just given that the corporations are becoming, so they're displacing workers, but at the same time, they're becoming more productive and more profitable. And so for them to be able to replace some of the taxes of those workers, I think, there may be an appetite for that as it gets debated and these ideas get floated. So you mentioned one is capital corporation, and I think you're about to jump into the second of those two.
Yeah. So the second thing is really around consumption, right? And maybe having a consumption tax. So most of Europe has what's called a value-added tax, VAT. We don't have a national VAT tax. We have a state-based sales tax, but maybe there's another layer added as a VAT and taxing consumption, right? So I think some people in Congress have brought this up as, let's have the first 100,000 of income tax be tax-free, and then let's add in a layer of consumption tax.
Yeah. So, that level 100,000 or whatever is probably flexible and will be debated. But to your point, if you're at 100,000 or less, for example, you would pay no income tax, right? But over 100,000, then you are being taxed. Yeah. And the value added tax is, we see that in states, right? States have sales tax and things of that nature, right? So as you consume, right, you pay a tax, and that tax happens at various levels of where a product's being produced, sold, and consumed, right? But we've not seen that, at least in this country, at a national level. And so I think what you're talking about is having, something similar to a national sales tax.
Yeah, exactly.
Okay. We also have, so government ownership, right? We're starting to see that, kind of be tested now. I think you had an example of I think it was Intel. Maybe you could say a little bit about that.
Yeah, and we own 10% of Intel. After the CHIPS Act, we started taking ownership in companies, right? Norway and other countries, they have sovereign funds, right? And Dubai and so forth. Maybe the U.S. has a sovereign fund that helps fund, all the social programs that we have. But I think what is clear here that we're going through these is that there's no perfect solution, right? Like the corporate tax, they have attorneys and CPAs to find ways to minimize those taxes, right? Consumption tax, well, then people will say we're taxing everybody, and people that don't have a lot, we're already taxing them, right? To that part. And then sovereign fund, I mean, having government have a stake in a capitalistic society probably may not go over so well, right? And so these are all challenging propositions, but it is a problem that we're going to have to face. The time is ticking. I would say we have a 6-year window for Social Security, and that's going to be more of the conversation to how do we solve that. But especially as AI and robotics become a bigger piece, we're going to have to figure out this deficit. It continues to grow, and Congress can't stop spending, but we've got to at some point figure out how to raise revenues to kind of bring that down.
Yeah. So in each, we've thrown out a few possible solutions, and each of them will have their proponents and opponents, right? And everyone will fight to protect, their territory or their or to reduce their own taxes as much as possible. But these are going to be interesting conversations. One thing that we do know is we cannot continue to just put it on the back of income producers of income tax, because it'll just be overwhelming for them to be able to support the rest of the country. So anyway, interesting discussion. We will hear a lot more about this topic as we move forward. We're just starting to hear some of these conversations today. So Amar, appreciate the work that you put into helping us prepare for our video today. And thanks everyone for watching. If you enjoyed this video, please give us a like. It helps others find the content as well. Also, if you would like to chat with someone about your own financial planning, asset management, give us a call. You can reach us at clientfirstcap.com. And from our website, you can schedule an appointment. You can give us a call, or you can sign up for our monthly newsletter as well. Thank you, everyone, for participating. Amar?
Yeah, thank you.